Good morning everybody, and this is your S&P 500 day trade setups for today. So we do have a little bit to go to the gap close, which is probably the first target, and that is at 41.08. If you look to the left, you'll see there is a swing low right at that area that needs to be tested, and if we keep going left, you'll see there is a little bit of interaction sort of at this area, and I'm just going to put in a zone, and you can see how that applies to the previous swing high or swing lows here, where we found support at this level and then sort of up and down below it, and we did reject it a little bit here. So that's the zone that we're looking for. Upper end of the zone is 41.42, bottom end of the zone is 41.08. Oscillators at the moment are not looking healthy, so well, healthy for any more longs at the moment. So that if they cross over like that, you'd expect a pullback of sort. Now, one more thing before we get to the lower time frame, and I think we can do it on the 3. Yep, we do it on the 3 hour. We had a move up, consolidation, and then a second move up. So there's our first leg up, consolidation break. That is our target. So let's just put that level in as well. And if you look to the left, you'll see there's a lot of interaction there as well. So that's a valid level to worry about. And then obviously we're looking for the pullback, which did materialize. It did happen yesterday. Same thing here on the oscillators. Oscillators are grouping to the upside. So this is looking a little bit tired. For all intents and purposes, on the 8 hour and 3 hour, we are still in a downward trend. You are looking for opportunities to short still, to travel with the trend. Problem with that theory is that we do have this potential inverse head and shoulders that has been breached. And then the other thing that you do have is a potential bottom forming. So what you'd really want to see is a bit of a rally higher up and then a pullback to come and find support. But if we move down to the levels that we trade, and that is on the 1 hour chart, you can see a bottom formed. You can see a clear range here between the moving averages. We've got a crossover of almost all 3 moving averages. It'll probably happen today. And then yesterday you had a breakthrough here, looked like a bit of an exhaustion bar. You can see when bars go small, bigger, 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 that's always an indication that you're coming up to exhaustion, because what you're actually looking for is nice, controlled and measured bars. And I'm not going to, well, here you'll see on the red, here you'll see first one is a big one, then they start getting smaller and smaller and smaller. That's kind of a well-structured downtrend. That's a well-structured downtrend. So you're looking for the same kind of thing on the uptrend. And at the moment, yesterday was, small measures, and then just big bars. So never a good sign that, let me put it this way, it's not a good sign, but it's a sign that the move is coming to an end. In that case, yesterday was the up move. Came back, tested the break, pretty solid test, tested it a second time, and then closed on its high. So on the daily, that's a fairly strong bar, but better than what we've had the previous couple of days. But oscillators also indicating a little bit tired. So I'm a little bit cautious. We do have this area of resistance ahead. I think that is probably more than likely what we're aiming for. Line in the sand is 41.61 at the moment, but this break of 40.46 and the way that we're holding above 4,000 is definitely something to pay attention to. So with all that noise in our heads, you can see, as I said yesterday, the trend is broken. We're looking at an uptrend. We're above the 155, and you can see how we flirted around with it, but a typical price action for a normal day. Big down, big up, big down, big up again. At the moment, on the 15-minute, we're looking for opportunities to continue this trend to the upside. So the big question is, off what? And I just want to put one more level here on the 15-minute. You can see there's a bit of a gap here and a bit of interaction here as well around this area here. So 40.69, 40.68, 40.69, pull back into here, and we start finding sort of some price action, in other words, inside bars, engulfing bars, or pin bars on that level, that would be the opportunity to buy. So I suspect Europe is probably going to run today as well. What you'd be looking for is a pullback onto structure, opportunity to buy. So something in there is going to give you a 320 point stop loss. So you need to be below this tail here. And then you're looking for 4108 as your first target. Rejection of that pullback onto structure, which would then be right here where price is at the moment, which would probably be around 40.84. You're again looking for structure, inside bar, engulfing bar, pin bars on that area, and then you're looking for a break of this area for 41.42. Those are the upper end targets for today. To the downside, we would need to drop below 40.46. So we need to see a break and a retest of 40.46, and that would bring us sort of into a downtrend. So 50-minute trend is up. 1 hour trend has potentially reversed and looking for some upside at the moment. What I'd be looking for really is a bigger consolidation. Let the oscillators ease off, sort of either crossover far apart or group to the downside, and then find some support on one of these two levels again. That's a double test and a higher low, so I'm confident that that level's been tested. We're obviously looking for another one. It could be anything between 40.69 and 40.46. So if you look to the left, you can see quite a bit of rejection that happened in that area. So I would expect some kind of a retest there. Okay, just a little bit cautious on the oscillators here. Any break back below this level, as I say, is bearish, and then you would be looking to target this gap close. But for now, 15-minute trades, wait for the structure, wait for the price action, and then look to target these levels to the upside. Hope it helps, and we'll catch up with you tomorrow morning. Cheers for now.